So, what does a rubber band and the market have anything to do with each other? Well, that's what we're going to dive in today. So, stick with me. My name is Brian Cannon, and welcome to Markets in Five. All right, before we dive into the rubber band effect on the market, let's talk about the market real quick. So, and I've showed this chart several times over the last, several markets in fives, and just wanted to update, where we are. So clearly, I kind of talked about this line here with the red arrow being very important to hold up, and sure enough, it broke through it. So, today. Fed Chairman Powell made an announcement that the Fed was going to take the Fed funds rate up by 75 basis points. Now, he previously said he would not do more than 50 basis points. So at the end of the day, you can't believe them. I mean, they're just going to say whatever they think, but at the end of the day, they're market driven. And there's some speculation about, would it be a point? Would it be 50 basis points? 50 basis points would tell the market, hey, they're not serious enough about this. Inflation is going to continue to run rampant. 1 point one point on the Fed funds rate would tell the market, hey, he's raising it too fast. It's gonna put us into a recession. So they split the hairs. They went 75 basis points. They tend to play the safe ground, but that's where we are. But here, generally speaking, the market usually fills a gap, and if the market comes up and hits that gap and can't break back above it, then it's going to further it's going to head back lower. If it can break back above it, then it's going to hit some resistance. I don't personally think we've seen the bottom yet. All right, so the rubber band effect. I am a big mean reversion guy. I believe that anything that gets stretched too high one direction or the other eventually snaps back. Right, so you can just see this chart over the last 5 or 6 years that essentially has been trending up. And then after the pandemic, it stretched so far, so low, that it just immediately snapped back. And then it kind of hit the average, and then it just took off, right? Well, there was a lot of pent up demand, and essentially that's kind of what's led to this inflation. So, there was a lot of supply chain issues and production that was stopping, and but the problem is people had a lot of money, and so demand didn't tail off, but supply did, and so that's what's led to this inflationary problem. And so you can see that the market just absolutely stretched so far on the upside that now it's snapped back. So here it is. Has come back down to the mean. So the question is, will it be able to stay there and kind of stay in the mean area, or will it drop on down a little bit? And honestly, I don't know. My personal belief is that we haven't seen the bottom yet, so we'll see. Now, this last chart, I think, backs up my belief that we haven't seen the bottom yet. So if you look at the weekly trend, when we look at daily versus weekly tends to take a lot of the noise out of the market, kind of smooths out the swings a little bit, makes it a little bit easier to kind of long-term look at a chart. So we've come all the way down, and we've broken through some channel support here. And I know it's hard to see. It's that little red dot right there, but we've broken down a little bit. And so, and I've been talking about these levels for a while. These are very natural levels for the market for buyers to come back into the market. So you've got the 200-day moving average here, which has had a lot of support over the last several years. And you also have a support level from a kind of a recent top. So I believe that buyers will come back in around that $3,500 level on the S&P, and will be participating as well. So you can't catch a fish if you don't put a hook in the line, and we plan on fishing. But at the same time, we're not going to throw all our bait in at once, right? It's going to be a strategic process over a period of time, because there's a pretty good chance that it may come on down and hit this lower level, or worse. If it hits worse, that means we are definitely in for a much, much deeper market drop than we are now. So that's just one of these things. You got to keep watching it. You got to know your levels, and you got to be able to judge your risk. So in wrapping up, you can see, I believe that anything that gets stretched too far one direction or the other eventually has a way of finding its way back to the middle, right? And I don't think the stock market's any different. And so we've obviously been stretched to the upside for quite a while, and so this is natural, and it's pretty much what needs to happen. It can't just keep going at the clip it was for forever. And so, that's what we like about technical analysis is it helps us to gauge the amount of risk that we should or shouldn't be accepting in the market. So again, at some point, we're going to want to go back fishing, but right now it's too rough of waters, and we're pretty happy with our bait on the boat. So if you have any questions, certainly give me a shout, and I'll plan to see you on the next Markets in 5.